Hello, everyone, and welcome to the Profit Report. We have an excellent show for you today. We will discuss Q2, the remarkable stock market comeback, and how our all-weather portfolio basically crushing the market. Moreover, we will discuss what to expect going forward and how I am positioning my portfolio to considerably outperform the market as we advance. I will also share some very special stocks with you, so please stay with me until the very end. Now, I have to admit, 2025 started off very rocky, and with the tariff-induced sell-off, the quote "Sell America" trade, Q1 was actually one of my worst quarters. Now, Q2 also began on a very rough note as, stocks tanked after the April 2nd Black Swan event. While I wasn't adding anything in late May or in early April, I increased my risk asset exposure very considerably by about 30%. And this risk exposure was especially in high-quality tech stocks and nuclear names. And I increased right as the market bottomed on April 7th. So almost everyone was selling. We witnessed about 9 to 10 trillion in U.S. Stock market losses in only about 3 days. So unless the world was literally going to end, I was very confident that this was an excellent time to buy. And I did. So buy the bottom is what I said to my investment group. And we can see here that I started to gradually increase in crypto first, and then I increased considerably in tech. I added 2% portfolio holdings in Google, Marvell. I increased Palantir around this crucial moment, and other stocks, VST, SEG. And I also increased Tesla by around 3%. Now, come early morning, April 7th, the market was in complete panic mode. And that's exactly when the market hit its absolute bottom. So the S&P 500 futures hit a low of 4,832 that morning. Now, just about 7 weeks later, the S&P 500 is around 6,250, a new all-time high. And this also represents a gain of about 30% from the April bottom. Remarkable. I'll be honest, not even I expected such an rally to materialize. So I did expect that stocks would bounce back and return to their previous highs and move on to new all-time highs this year. However, I did not expect it to happen this quickly in only 7 weeks. Now, I also bolstered my stock positions considerably again on April 10th when the S&P 500 retested the low. But this time it was only around 5,100, but that proved to be the double bottom low. So it was an ideal time to increase, and I increased holdings in Snap, Marvell, AMD, Tesla again, Dell, Tra, Sentinel-1. Now, some people ask how I knew that it was the bottom. Well, many people were absolutely terrified to own stocks around late March and especially in early April, and for much of May even. Some people may still be terrified, but the market really doesn't care about that. It's 30% higher now. The market likes conviction. Also, I didn't know it was the bottom, but I was highly confident that we were very close to a long-term low. After investing for almost 25 years, I've seen many things. I knew that we were not around a Lehman Brothers moment because I was there. I remember it, the financial crisis of 2008. It left such an imprint in my memory that I recall it as if it occurred yesterday. Moreover, I understood the basic strategy of the tariffs, which I believe that many people misunderstood, unfortunately. And this was one of the reasons why I realized that the market was having a massive panic attack due to the overwhelming negative news flow. We had that constant drumbeat of negativity in the news, and it was causing panic, which was terrible in my view because it caused many people to sell around the bottom, and many people didn't get back in, or maybe are still not back in the market. So, it's terrible. So in many cases, I find that it's best to just shut the news off as they spread more fear than offer anything constructive. Also, the VIX was about the highest it has gotten since the coronavirus panic low, and the fear and greed index hit a 3, its second lowest reading ever. So I was pretty confident that we were around a real long-term bottom, in early April. There was no deadly virus ravaging the planet, and there was no financial crisis like in 2008. Instead, the market was just panicking over economic policies, and we now see that the panic was severely overdone. So we haven't seen inflation rise as was anticipated by many economists, and we have not seen such a negative impact on corporate profits. So despite the tariffs, the negative economic impacts have been very limited. And the U.S. has gotten enormous investments from foreign firms looking to relocate parts of their businesses into the U.S., which is a huge net positive for America. In fact, the U.S. economy is essentially firing on all cylinders now and looks stronger than ever going into 2026, in my view. The future is very bright, and growth could be much higher than expected, as future trade agreements could be much more favorable to America and its interests than the previous, quote, trade deals. Okay, so let's take a look at my all-weather portfolio versus the S&P 500 and other stock market averages. So the all-weather portfolio closed out Q2 with a 33.5% gain, which brought its year-to-date gain to about 23%. Just in the quarter, that represents a 100% outperformance over the NASDAQ and more than a 200% outperformance over the S&P 500's return. Again, year to date, the all-weather portfolio is now up by about 2.5%, which pretty much dwarfs the NASDAQ's and the S&P 500's approximate 5% returns. Now, I just want to make a note here that my all-weather portfolio is a real-time 100% transparent portfolio, which means that all trades and adjustments, they get announced in real time with instant alerts sent out to all investment group members. Now let's talk about what really worked in Q2. So many sectors did well, but our most significant diversified technology segment really worked. Last quarter put up a 36% gain with several leading stocks like Palantir, Tesla, AMD, Marvell, Broadcom, Meta Platforms, Dell, Celestica, Mobileye, and others. They basically led the way, and these stocks, they gained, between 30 and 100% just in the second quarter. Still, my industrial materials and nuclear segment performed even better percentage-wise because it appreciated by about 50% in the quarter. Now, stocks like MP Materials went up by 80%, Vistra, 66% gain, with CCJ, the biggest nuclear miner globally, was up by 78% in Q2. Oklo, of course, I'm sure many of you know Oklo, up by 85%. So these and other stocks, they did very well. Of course, I took some profits on the way up, and I implemented some covered call strategies as a hedge, which limited some upside potential in some cases. However, I'm not greedy. I took some very nice profits. I reinvested the profits in other areas of the market. And generally, I feel very content with my portfolio's performance in Q2. So other segments. Let's talk about the good, the bad, and the ugly a little bit. So the gold and silver mining segment, I call it the GSM segment, it also did very well. It delivered a solid 17% gain in Q2. This sector also is a considerable sector. It represented about 15% allocation size. Now, that's not to say that the nuclear segment isn't significant. The nuclear and the materials industrial segment, it's actually close to 20% of the portfolio. So these are significant segments doing very well. Now, the cryptocurrency basket was a relatively minor segment in the quarter, about 5 to 10%. This segment delivered a 55% return in the quarter. The oil and gas segment gained about 5%. And the only real ugly duckling that got hit hard in Q2 was pharma and biotech, which gave up about 15% in the quarter. However, it's only a 5% allocation, so it's really no big deal there. Let's talk about some mistakes and takeaways from Q2. So for one, I should have probably been better hedged going into April 2nd, while the magnitude of Liberation Day Black Swan event was essentially impossible to predict. Less risk and more hedges would have been a more practical approach in retrospect. Additionally, I may have exited several positions like Oklo too early, on the way up in the rebound, and some CCD hedges limited some upside, but really not much. It was only in a few select names. Also, I probably should have diversified more toward defense. So there are some minor changes I would have made looking back, but hindsight is 2020, and I'm still very happy with my results. Now, going forward, what to expect? Let's take a look at the S&P 500 chart here. Now, the S&P and stocks in general have had an amazing recovery off their panic-driven, irrational April lows. While this dynamic is highly constructive and demonstrates that America is back and possibly stronger than ever, trees can't grow to the sky. Therefore, this rally is going to need a breather, and we could see about a 3 to 5% pullback relatively soon in my view. I've taken some more near-term profits in really high-flying, tech stocks. Also, I've increased my dry powder holdings, bumping my cash position up to about 10%, in recent sessions. I've increased positions in more defensive and underperforming places like specific underperforming tech, oil and gas, gold and silver, lithium, industrials, materials, and even some select crypto that has underperformed lately that could potentially outperform Bitcoin as we move ahead. Now, while there may be some near-term turbulence in future weeks, there are many very constructive intermediate and long-term catalysts going into H2 and 2026. Fiscal and monetary stimulus, more investments in America, potential for a high-growth economy, and other favorable catalysts that could drive stocks substantially higher in the next 12 to 24 months. Therefore, I remain very bullish, and I expect very solid performance in H2 and in 2026. I've recently increased my 2025 year-end S&P 500 target to 6,800 from my previous target of 6,500. Now, just to clarify this, I originally had a 7,000 S&P 500 target at the start of 2025. After the Liberation Day Black Swan event, I lowered my year-end target to 6,500. And more recently, as the market has recovered, I have increased it to 6,800. So we're really not far off from my original 7,000 S&P 500 year-end target. And in a bullish case scenario, I think we can hit 7,000, maybe even higher by year end. I'm also bumping up my all-weather portfolio full-year target return range to 40 to 50% from the previous 30 to 40% range. That was my original range at the start of the year, and I didn't lower it when the market dropped because I was very confident that we could make up the gains. So I've simply just raised it recently from 30 to 40% to 40 to 50%. I want to thank you very much for watching this profit report. I truly hope that you enjoyed it, and more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comment section below. If you liked my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you guys. You can also join the Financial Profit, my exclusive investment community, which is seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our 500 member plus investment community. Thank you very much for watching my video. See you next time, and have a wonderful day.